we keep a close eye on Dow 20,000, let's not forget the Federal Reserve. At this time tomorrow, we will know whether we saw a rate hike. I want to bring in two names you need to listen to right now. John Lonski is Moody's chief economist, and Peter Mallouk is president and CIO of Creative Planning, one of Barron's best of the best. Let me start with you, Peter. Let's call it here and now. You've got $22 billion under management here. What are you doing with it in advance of the Federal Reserve announcement?
Well, I think we've already priced in, the market's already priced in a 90+% chance of the Federal Reserve raising rates. So we're not really reacting to tomorrow. We're looking to next year where we expect further rates. We're shortening our duration on bonds, and we're looking at the impact it'll have on U.S. markets and other opportunities.
Are you selling or buying, Peter?
We're definitely buying on the equity side. We like big energy, like master limited partnerships. It's hard to see a friendlier administration than the current administration. Even their Secretary of State is energy related, so it's hard to really paint a picture with all the variables where that can go wrong, although of course always things like that can, and we like big companies with financial backgrounds like Berkshire Hathaway.
John Lonski, would this be a quarter of a point hike or maybe a 50 basis point hike?
If it's a 50 basis point hike, I'm going to fall off my chair. No, I don't think that's going to be the case. Fed has no reason to shock the market in that particular manner. Though inflation expectations are somewhat higher, they are still very well contained.
Very well contained. What is the number one data point that our viewers should watch that you believe the Fed looks at right now?
Well, you know, we've had quite an improvement in business sentiment as well as in consumer sentiment, but yet we have no hard evidence that the rate of growth for consumer spending has improved measurably. Let me add, you know, at the start of each month, Blue Chip does a survey of 55 economists. They ask them, what is real GDP growth going to be in 2017? Prior to Trump's election, the projected rate of real GDP growth was 2.2%. After the election, 1 month later, that projected rate of real GDP growth went all the way up to merely 2.3%. So there's a lot of skepticism as far as the underlying rate of growth for spending in this economy goes.
It's a psychological bump.
Retail sales
let me just, okay, I don't know if he can hear me. Peter, quickly, on this moment, what are you advising investors to do?
Well, I would disagree with what was just said a little bit, because prior to the election, unemployment had dropped below 5%. Once it gets substantially below that, you have wage inflation. That's what drives GDP.
Hey, guys, you got to witness it. It's a lifetime closing high as well as for the S&P and the NASDAQ. But the Dow's the star.